What is good, guys? It's Ray J back with another video, and this one I want to break down something very important about the whole market involving the Fitch rating, talk about the timing of it and why on earth this does suggest something very big that's going to happen to the markets, and how this may affect Tesla for the end of the year. I'm going to break down why it's possible that Tesla could be slow for the months of August through September. There could be some sideways price action coming, some bearish price action too. But then near the end of the year, during Q4, there's also a possibility of a monstrous squeeze to come, and we may see Tesla and many of these stocks go absolutely parabolic. So I'm going to break down exactly why that is, what are some important levels to watch for, and what's going on with all this news in more details. But before I break anything down about this, let me just mention a couple of things. I am firstly not a financial planner, so make sure you take none of this as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you are guaranteed up to 12 free stocks. The offer ends in just 10 days, so check it out before they run out. With that out of the way, let's get on with the video. All right, so Tesla was down 2.11% for the day on Friday. It's a little bit green in the after hours, but overall, Tesla's on a downtrend. You can see it quite clearly right about here. Now, forming this bearish divergence, Tesla has been continuing to downtrend, and although it made an attempt to bounce, it ended up failing once again with the market, and Tesla is getting very close to this critical support at this 250 area. This also happens to be at the 50 EMA. If this does end up breaking, we're going to likely see more downside for Tesla and possibly some gap fills to come. Right, we have this gap down here around this in the 230s. There's one gap down there. There's another one, I think, down in like the 220s. Those could get filled if we continue to break down, but we have to wait and see if this breaks first as our confirmation. But here's the thing about the markets. Why is the market selling off like this? And what does this mean for Tesla's future? I just want to point your attention to what happened to the market in the past. If we look at Tesla, for example, right here on Tradedics, you will notice that Tesla has a tendency of moving quite similar to both SPY and the triple Q. We actually have the data right here. So this is actually SPY right here, right? And this is Tesla right here, right? You will notice that basically they were pumping together near the very beginning of August last year. They came down together, they pumped together, and then Tesla started selling off. They pumped a little bit together, and then instead of continuing to pump, Tesla continued to sell off very hard as Elon Musk was selling his shares to buy Twitter and to do things like that, and also pay for certain taxes and just all those different things. And then after that, look at how they've moved. They pumped together, they came down very similarly. They pumped together, came down, and then pumps together, and they've been pumping since. Now, both of them are also declining together, so there's a big similarity between how Tesla and SPY end up moving, believe it or not. And then if you look at the QQQ, it's the same thing basically. Both of these came down together very similarly. They both pumped together, came down together, then pumps together, and now they're actually declining together. So very similar price action between SPY and Tesla, and then Tesla and the QQQ. Now, I bring this up because the market, as I've mentioned on this channel before, the market is moving on an algorithm. This algorithm dictates how these different stocks move, and that's the reason why we tend to see them move similarly. Now, if that's the case, if the robots are the ones who are dictating the markets, at least to some degree, and they make moves based off what we do, and they also react to what retail and many other institutions end up doing as well. So there are all these different factors that impact how the market moves. But the question is, why is the market all of a sudden selling off? And this news came out, right? That Fitch has downgraded the US long-term rating from a triple A rating to a double A plus. I'm sure you guys have heard of this. This happened to come out on August 1st. Now, many may argue that they've been working on this for quite some time, but it's very interesting how this wasn't official. This didn't officially come out to help the market end up dropping, to help those bears until August 1st, right? And that's very, very interesting to me. Now, their reasoning behind this was the debt ceiling battle, which took quite a while. And that happened many, many months ago. So, once again, this timing is very suspicious, at least in my opinion. And then when you look at the historical data on SPY, you will notice that if you look at the S&P 500 or SPY, this is all the same. Basically, for the markets, we tend to see July being a relatively strong month. And that is what happened for the markets. July was quite strong. But then August tends to be weaker than July, and September tends to be weak too. So the August through September period tends to be weak historically. Then October and November tend to be stronger months alongside December. November tends to be one of the strongest months of the year. So make sure you guys are aware of this. Think about what this means. So this is suggesting that the market may see a slowdown for August and maybe even a part of September. But then by the time we get to October/November, things should really, really improve. But what does this mean? Here's the context. When you look at what happened in 2011, the S&P 500, right, basically got this big drop after the downgrade news also came out. The US got a downgrade from Fitch even back then, or it may have been another company, but it's basically the same thing. So the market came down about 11% the last time that happened. And it doesn't have to drop that much nowadays, but I just want to remind everyone that there's a possibility of more downside. But why on earth did this happen? Here's the answer. A lot of these institutions, these big money traders, they made a mistake. Okay, they made a mistake. The market was already pumping, and many of them ended up jumping into the markets kind of late. They were a little bit late because the market's been pumping so much. Many of them were talking about how the market was going to tank and this and that back when SPY was in like the 420s, and it ended up it just kept going basically. And you guys remember that time when Powell was speaking and he ended up pumping the markets really hard, and we hit like 460. I think it was this day right here, back a couple of months ago. Many people thought the market was going to tank, right? It ended up doing the opposite. Powell ended up pumping the markets. And many institutions, many good investors, even like Michael Burry was talking about more downside. And he's been wrong about that. So have other investors. So the point I'm trying to make is that these Wall Street investors, they could sometimes make mistakes too. And they realized that, hey, we entered kind of late and we want to make a lot of money. So they started shorting the market at these high levels. This is part of why we saw this like bearish engulfing candle, which suggested a reversal was coming. And then historically, during the month of August, we tend to see the market slow down. So 1 plus 1 is obviously adding up. But to add on to this, just remember what their plan is. Okay. Think about what's going to happen next year. What's happening next year? It's 2024. Remember what happens in November? Every 4 years, we have another election, a presidential election. Excuse me, sorry guys. When it comes to the presidential election, why would they cause the market to crash and have a very, very bad year when there's an election coming up? Why on earth would that happen? Just think about that. It's going to make things very difficult for a certain someone. So I believe that they want to hold the market up and they're going to try to pump the market for the end of the year to get a very strong year. How do you do that? How do you give us a strong year? Well, the market's been pumping for the majority of the year. We could all agree on that. But here's the thing. They know the market had to pull back. So instead of helping the market just pump and pump and pump and then causing, which could have led to a pullback back in like, or like in the future in like October or November or something like that, they want to get the pullback out of the way early during the August through September period, which is what historically and typically happens the large majority of the time. Right? On SPY, you can see right here, August through September tend to be weaker periods for the markets. They know this. They want to get the selling out of the way because 80% of the time in November, the market is green. November is one of the strongest months of the year. They want to pump the markets like crazy during Q4. And I think that's what's going to happen. Now, let me just say, okay, I can't promise you that I will maintain this position because it depends on the news, right? If there's a new virus or something crazy happens, I could change my opinion. But right now, given the current circumstances, given these contingencies, my opinion has not changed. I simply believe the market is going to pull back a bit more, but then it's going to see a monstrous pump for the end of the year, and it's set to do that most likely. I think this is what Wall Street is planning. This is why they're letting this happen, and they are not going to let the market perform this badly at the end of the year. Don't forget the elections coming up for next year, too. So, those are just the things I believe are very probable. And what's going to happen is they're going to continue to scream this news, right? Fitch downgrades the US long term rating. Some other bad news is going to come soon. They're going to keep trying to get bad news in. They're going to try to tell retail, sell your shares, get out of there, get out of the stock market. Things are bad. We're going to crash. People are going to become more fearful. And let me show you what I'm talking about. The fear and greed index was extremely greedy. Now it's becoming just greedy. It's going to get closer to neutral than fearful in the future, most likely. And then to add on to this, greed is currently making up the market momentum. It used to be extremely greedy. Now it's coming down a bit. Stock price strength is still extremely greedy. It's starting to drop a little bit though. And then looking at like the McCullen volume summation index is suggesting the same thing. But look at the VIX right now and its 50-day moving average. It actually broke above the 50-day moving average. When this tends to happen, the market tends to get these slowdowns. There are many periods where this happened. So this is now a fearful indicator, and this tends to be a more bearish indicator too. So what that tells me is we're going to likely see SPY come down. Now, assuming this thing continues to break down, right? Let's just say it does. We're going to be watching some of these gaps down at like 442. If that fails us, it could come all the way down. I'm not going to rule out like 436 or something. They could even drag this thing down a little bit lower than that. Their plan is to drag the market down, turn everyone fearful, believing in a crash, getting everyone scared. And then what they're going to do is the market's going to chop around a bit, keep it low, and then they're going to start buying shares. They're going to start accumulating more and more shares, right? Just like this moment right here, we had this accumulation phase. We had some consolidation that was bullish right here before they pumped this thing harder. Even like right here, you could see there was bullish consolidation when they were trying to acquire some shares. But this was not all institutions, not all of Wall Street. This was some institutions. Other ones were kind of late. They started to like buy in like around this period right here, a little bit too late. So what they want to do is they want to improve their balance sheets. So they're going to let the market come down. They're probably shorting the market already. Okay. And then if you look at the S&P 500 or SPY, for example, the short interest is starting to go up again. We got this big spike over the last couple of days. We're going to likely see more spikes as well, in my opinion. And then what's going to happen is they let the market fall. This may drag Tesla down, of course. I'm going to talk about Tesla in a few minutes. Then they start buying shares down here. And then at the end of the year, particularly the end of September going into October, the market starts running and we get a very, very strong November, in my opinion. I think they're going to try to give us a strong November going into December, and the market's going to get a relatively strong year. That's what I'm leaning towards. I think that's exactly what Wall Street wants. That's exactly what certain people want, especially for next year. And this is all part of their game. This is all like a matrix market. Everything is being planned out already. This is what they're probably trying to do. Now, you could say that, hey, I'm crazy for thinking this, but I also told you guys in the past that the market had potential for upside. I've been saying that since June, and the market has been pumping quite a bit. Now, there were some instances where I thought we could have seen bigger downside like this moment right here, but the market kept holding above our 20 EMA. And in this instance right now, we're looking weaker than that. So there is going to likely be a little bit more downside, of course. But don't forget, this is all part of their plan. They're going to let the market drop, let it come down, and buy at the bottom, tell everyone to sell. They're going to be buying the shares off retail, the people who are selling, and they're going to pump it at the very end. Why is this significant? Because remember what I told you about Tesla in the beginning of this video. Tesla tends to move similar to the market, okay? It tends to be affected by the market. Now, even though Tesla's short interest is starting to go up a little bit, the thing about Tesla is it is a very resilient stock. And could you argue that it may be forming like a head and shoulders right here? We have like a left shoulder and a head. So could it get like one more pump and then it comes right back down? Maybe, or it might not even get the pump. It may fail to form a right shoulder and just continue dropping. That depends on how it reacts to this 250 area. If it just breaks immediately, it's going to likely sink lower. If it doesn't sink immediately, there is still a possibility of a right shoulder and then it drops. But anyways, the bottom line is there's likely going to be some downside coming for Tesla. It's very probable. Uh, if it breaks the 250 area, we're going to see it fill this gap all the way down to the 230s. The 220s become possible for Tesla too. The 200 EMA is going to be a level to watch for if the 230 area breaks. And we're going to likely see it continue to drop. This could be a good area to start dollar cost averaging down. But like I said in my previous video, why would we talk about like these very low levels if Tesla's not even close to like 160, 180, even 200? We're nowhere near 200 on Tesla. We're very far from it, so it doesn't make sense to talk about that just yet. So I don't really count on it coming all the way down there just yet until we finally start breaking critical supports. But anyways, here's my point on Tesla. Tesla is going to likely try to follow the markets if everything goes as planned when it comes to earnings and deliveries. I don't know so much about the long-term future for Tesla in terms of like the rest of the year because it depends on their deliveries that are coming out. It depends on their earnings and just things I can't really predict perfectly. Those are going to be some very big factors. But as long as those are decent, as long as they don't really cause Tesla to crash too hard, there's a good chance that Tesla could sell off thanks to the market for now, for the August through September period. then get a monstrous rally near the end of the year and break all the way back up to 300 plus. There's a possibility of that. You could also see a massive short squeeze. That's why I'm going to be paying attention to Tesla's short interest very carefully to see if we see a big amount of short shares being shorted, lots of these shorts piling in basically. We're going to be watching for that. And if that ends up happening, we're going to see another short squeeze on Tesla and a monstrous run. When Tesla gets these drops, okay, you will notice it's a very resilient stock. It dropped down to 100 very sharply, then it rallied all the way back up to 222. Then it dropped all the way down. Well, it basically dropped down to like 160, came back up to about 212, came down to 150, pumped all the way up to about 275. It came all the way back down to about 240, went all the way back up to 300. Now it's dropping again. What do you think is going to happen? Is it going to keep crashing or is it going to come down and get another bounce? I think it's going to bounce eventually. It's just that the extent of the bounce is going to be determined by their fundamentals, their earnings, projections, their guidance from earnings, and their deliveries. Those are going to be some big factors I can't really account for right now. I can't really predict those, at least for now. So for now, I'm just going to note that if Tesla's external factors remain the same, if their deliveries and etc. are just fine, we don't worry too much about those. If Tesla just moves with the market like it has been for the majority of this year, so if this continues, right, Tesla moving just like the QQQ and SPY, then I'd be anticipating, okay, that Tesla may cool off for August through September and then get a monstrous rally from October through December and break past 300, come all the way back up and push like crazy. I think there's a high probability of that happening, but there's also the factors of earnings and et cetera, which I can't really predict or account for perfectly. That's the reason why I can't really predict this with precise numbers, but I will tell you that there's a good chance of that potentially happening. And I want you all to just remember this video. Remember this for many months to come. Remember what I'm telling you, because this could be what happens to Tesla, and this could help you with your trading when you have these assumptions in your mind. When you know that there's a good chance of this happening to the markets, this could help you. Now, you guys could go into the future, maybe in like 4 or 5 months, go into the future, look at the charts and see if it aligns with what I'm telling you. But I do believe it's very likely the market is set for some downside because of what Wall Street wants. And then they're going to be buying the dips and pumping us at the very end of the year. And they use whatever they can to try to drag the market down. And I think this news right here was part of their game. I think this was part of it. And I think that Wall Street wants a very, very nice amount of profits at the end of the year. And they're going to try very hard. And I think that's all part of their plan. Okay, guys. So I hope this was as clear as possible. Thank you all so much for listening. Have an absolutely spectacular rest of the day. Remain calm, cool, and collected. Do what you have to do, and I'll see you guys in the next one. Tesla to the moon because the long term is still incredibly bright, and peace out.